Okay, this time for sure. We're going to do a talk on a company's authorized stock, what's issued and what's the float. And the reason this came up was because this NEGG, and this is a very difficult stock to try to figure out what it is and how much stock is outstanding. But we can see this stock at $58 is trading at 24 billion market cap. I mean, it's up 5 or 6 times from just a week ago. So how can they move a stock like this? And that has to do with the three concepts: authorized stock, issued stock, and float. So let's start with another one that was a big mover, and this was the ELF. This came from 3 or less to 20, so it up sevenfold. And how can that possibly be? How can that possibly happen? So let's have a look at ELF's financial statements. And the only thing that's of importance to us here in these financial statements are the issued and outstanding stock. So we have 80 million shares authorized. So what that means is that when this company was set up, the original charter, articles of incorporation, they had 80 million shares that they have the ability to issue to people for whatever reason, either to raise money, incentive programs, stock options, underlying stock options, to use as currency to buy things, other companies, etc. So there's 80 million shares authorized. That's the total amount that they can ever issue, unless at the next AGM or a special general meeting, SGM, they put it to shareholders vote and they get enough votes to increase the authorized capital. In this case, it's just the 80 million. And we see that in March 31st, 2021, they had issued 4,599,084. So let's just call it 4.6 million shares. And that was up about 200,000 shares from the end of the year, December 31st. So, and I just saw that the issuance of that was to pay off some debt, to incentivize a few people, etc. So this is the second concept. These are the shares of the 80 million shares. 4.6 million of those shares have been issued to various people. And you can look at their filings. You can see how much of the insiders own, etc. Now, some of those shares will be restricted. That is, they're not available for sale. And some of them will be registered or have an exemption from registration. And that's the float. So there's the difference. The 80 million is authorized, the 4.6 million is issued, and then of that issued, how big is the float? Well, I didn't see it right away looking through their filing here, but it's around 1 million shares that have been registered or have an exemption from registration. So you cannot sell, just because the stock is issued, that doesn't give you the right to sell that stock. You have to have that stock registered, and there's several ways you can do it. You can register it on Form S1, 2, or 3, S8, Reg A. There's a few other registration type statements that are available. It's a lengthy and expensive process, but you can register the stock. Then there's also certain abilities to have the stock become free trading with an exemption from registration. And that's through Rule 1. The main one that's used for that is Rule 144. So this stock, of the 4.6 million that are issued, only 1 million of these are free trading. So that's your float. To be in the float, it has to be free trading stock. So there's a couple of things that this means. With only 1 million shares free trading, very easy to move the stock higher, even if there was 80 million shares issued. None of that stock is available to be tradable. So in this case, it's 4.6 million that's out there. So 3.6 million of those aren't available to be traded. Only the 1 million can trade. So, if you get Wall Street bets on your deal or whatever the case may be, the market general sees this thing. It's a low float, it's a low capitalization. They can really move the stock. Where the issued stock becomes important, not the float, but the issued stock becomes important, is for market capitalization. So the market cap, the value of the enterprise, the value of the company. So in this case, the stock was trading at up to $20, and it's so 4.6 million shares. That's 9.92 million dollars, right? Yeah, $20 times 4.5 is 92 million. So it had an enterprise value of $92 million. Now the NEGG, which we were talking about earlier, went from 10 to 70. I mean, that was that gave it a 25 or $26 billion capitalization, market cap. Not based on the float, but based on the number of shares issued. So there's where the shorts are going to look at this and go. And that was the same like the GME and the AMC, all those stocks. They got up into these huge numbers, huge valuations. And the shorts are going, there's no way a company that filed for bankruptcy, AMC being the case of AMC, filed for bankruptcy and was under $3, should trade up to 60. Based on the number of shares outstanding, went to multi-billion-dollar market cap. Why? And for a company that was filing bankruptcy. So that's what the shorts are looking at. They're looking at the total book value to start with. What's the book value of the company? And that's the stock price multiplied by the number of shares issued. Now, in the case, some of these ones that are so low float, the valuation goes out the window because becomes the greater fool than I am theory. Everybody jumps in it, hoping to be able to buy the stock and trade it and sell it to somebody at a higher price than that they bought it for. Now the NEGG, this is a very difficult stock to decipher how many shares are out there. I looked at their financial statements, and it's difficult to say. But I did go to Google, or not to Google. I went to Yahoo Finance, and we see here that the stock's trading at 56.44 with a market cap of 21.5 billion. That means there's about 37.5 million shares issued. Not free trading, but that's issued. And so, it gives it a huge capitalization. We would have to then, look and see of those 37 million, how many of those are How many of those are free trading? And if you look at this capitalization, this must be a number on this side here. I haven't actually done the calculation, but it only shows a 69 million market cap. So obviously the number of shares outstanding or issued, free trading is very thin. Only 1 million shares or so, just over 1 million shares of free trading stock. So it's very easy, even though the market cap is 24 billion. It's much easier for it to move the stock, and because there's only 1 million shares issued, got up to 70 million. So not a little bit more than that. So just to make it more confusing, there's 3 concepts. There's authorized stock. That's the number of shares that are available to be issued, and it's usually set up at the very beginning when a company is incorporated. Then there's the issued stock. That's all the stock of the authorized that has been issued to date. Not all of it's free trading. Some of it's restricted. And then there's the float. And the float contains all of the stocks that have been registered on a form like, say, S1, or have an exemption from registration, say, on Form 1 through Rule 144. So if anybody has any questions on those three concepts, please feel free to ask me.